Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So by the range of the trading here, we can't say that something has changed significantly, just because you could see that it was Monday session and today's market stands actually on inside session. The only question here on daily chart is about the grabber. So market right now is flirting with the MACD indicator, and it stands right, as you can see, between two big trend lines. Cross-market view suggests that downside breakout seems more probable in the current circumstances, even based on just 10-year bonds. So if you take a look what has happened, we briefly talked about this in the weekly report, that in a big scale, so if you take a look at this big consolidation that we have on 10-year bonds, this is daily chart, but if you take a look in the weekly, you'll see it better. You can see what's going on. So market shows fast and early upside reversal, and this action stands with a significant acceleration, which significantly increased chance for the possible upward breakout, and it means that in this case market could proceed higher back to the 5% level. Here you can see kind of the falling wedge pattern. So that obviously will be supportive for the dollar. So yield will rise also. You can see the divergence we have here. And obviously this becomes the headwind for gold. On a dollar index, we do not have any significant action, but you can see trend has turned nominally bullish. So this is also some kind of the bullish performance that we have. From that standpoint of view, things that we talked about in the weekend concerning the bearish signs. So the Russian rings here drop back below the trend line, actually some kind of the failure upside breakout, which is also called in the classical technical analysis signs as a bullish trap. All these things suggest downside continuation. Possible target to the downside, if it will happen, and based on the daily picture, it will be somewhere around 26-2610 area as a fib level, and you can see this is the oversold on the daily chart. That's what we have here. On the 4 time frame chart, picture mostly stands the same. Market remains at the same confluence support, but now it is making an attempt to break it. It's 2650 confluence support. Here you can see the minor grabber is appearing, and actually suggest drop below these lows. Since our first step in our plan for this week was about possible pullback here, so we said let's keep watching what will happen here. Hopefully we'll get some bounce to consider possible short entry for the downside continuation. So if this bounce will happen at all, it's probably taking into consideration this possible grabber, this probably could take the shape of the butterfly. So everything could start looking like this. When the grabber will be formed and will be completed by taking out of these lows, market could form kind of the butterfly here with the 26, 38, 127 extension approximately. And then we need to keep an eye on. Normally, if pullback is really will be on table, here we probably should get something like hand and shoulders or something like this on the hourly chart. And in this case, we could get minor A, B, C, D for a pullback. From this point of view, our two levels to watch for first is 2660, but more attractive 2670, 2675, because it will be confluence, and it is also, take a look, the neckline of our kind of the hand shoulders pattern. So this how the ideal picture might be looking. So dropping down, pullback, hand and shoulders, and A, B, C, D. But this is, as you understand, ideal picture. Everything could go a bit different. That's why if you are considering taking the short positions, just think and watch and keep an eye on these two levels. So just let's watching how market will show a response on this. it also might happen that we will get no response. So market could just keep going lower and breaking down, start moving back to directly to the target. Well, in this case, we either will miss the trade if action will be really fast, like here, or we will get chance to step in on some minor pullback on the hourly chart. That's the actually options that we will get. But currently at this point, I do not see any significant bullish signs. So currently, I wouldn't consider taking any longs by far.